Hi, welcome to this video today, which is on the 10th of May. We are on Sunday. We're just going to be giving our weekly Forex forecast, picking out what we consider to be really good risk-to-reward trading opportunities for the up-and-coming week. Quite a few charts to look at. We're going to take a look at them in a moment. Now, in terms of Forex markets, over the last month or so, we've seen the volatility really drop down. Now, obviously, volatility very high when we saw stock markets selling off hard. Stock markets have recovered and are grinding higher. That means volatility in the Forex markets has dropped. We don't expect this to last. And in terms of many of the pairs we're going to look at today, they're at critical levels of support or resistance, which you can key off with really good risk to reward in our view. Now, in terms of the stock market rally, a lot of people are saying, well, the worst is over. Stocks should go to new multi-year highs. Global economy, V-shaped recovery. It will soon be back to decent growth. We do not share that view at all. In terms of stock markets and the rally, I think you've got to look at history. Okay, if you go back to any recession since 1900, when you've had a recession, you've seen a big sell-off in stock markets. Then they've had a sizable rally between 20 and 40%. This one is in the middle of that range, and then stocks crash to new lows. I do not see stock markets remaining firm for too much longer. I think we should be alert for a big breakdown in stocks and the Forex volatility to pick up. Now, what we're going to do is we're going to go and look at pairs that we think offer the good risk reward trade. So we'll go over to the charts now, but just obviously before we do so, please do keep in mind it's my view as of this specific moment in time. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can get live access to our member centre by clicking on the link beneath this video. You can also join our Facebook group of traders and follow our Facebook page as well. And I've just been doing some charts and updating them this weekend in the member centre, so we're going to use the charts from there. I'm going to start with the major pairs, and it's going to be Euro USD first trade setup. Right, Euro USD first pair. Now, in terms of this pair, big rise up here. Okay, set at the time that was just a short squeeze. Too many people short the euro, they get taken out of the market. We expected the euro to fall, which it did. And then when it fell really hard, we were thinking would not get too far away from this 20-day moving average. The green line does come back up through it, immediately sells back through it, gets above the 20 again, sells back, above the 20 again, sells back. It can't get clear or too far away from that 20-day moving average. And I don't think it's going to get too far away as we move forward. It's a kind of messy sideways action with a downward bias. The volatility now has become very low. You can see it by the width of the outer Bollinger Bands. They're tight. Over here, obviously, when volatility high, they were wide. This low volatility, I personally think, is going to end, and the euro will break to the downside. I don't know when that's going to come. It's to do with the fundamentals of the sentiment, which I'll just go through in a moment. But I think in terms of upside, you've got 109, a round number here. Then you've got this key 110 level. It's going to be very hard to take 110 out. So rallies, failures into resistance, or we get a break, the double bottom there, new daily lows, 104.50, then the par level. In this pair, you can see the position 109.40, 108.35. It's a 100 odd pip profit. It's nothing profit at the moment, but I think it could become a good one. That's to do with the fundamentals and sentiment. A lot of people are saying, well, Federal Reserve in the States, they're printing huge amounts of money. Well, they are, but there's a global shortage of US dollars. That's not going to hurt the USD longer term in our view. I'll talk about the shortage of dollars a little bit later and go through some other pairs. If we get risk off, then I think the dollar will obviously strengthen. It's a second safe haven behind the yen. But what if we don't get risk off? Does the euro have much upside? My own view is no, because there's a huge dispute in Eurozone at the moment. Now, every major economy has been hit hard economically by the pandemic. But that economic hit on all nations in Eurozone, what it's done is it's brought out the bitter divisions between the nations. So, the richer nations of the north do not want to guarantee the debt of the poor nations of the south. Now, in terms of this, Italy, Spain, deep problems. They need a lot of money. They need help from the rich nations, but that doesn't look like it's going to be coming. You saw the week just gone by, the German highest court in Germany was questioning the legality of what the ECB are doing with stimulus. Yeah, the divisions are so deep, we do not see them being healed. There's a very real possibility of Italy going down, or even Spain. And I think a lot of analysts and economists are not really so focused on the story. But yeah, extremely serious. So yeah, I haven't seen much in this pair yet, but all the risks are to the downside in our view. And we could see a big trend develop at any time. Now, in terms of one pair, in terms of being short the euro, I really like the look of Euro JPY, which I featured, well, in a good few videos, been basically bearish for the euro about the last year and a half. And yeah, the euro for us now is in a downtrend on the yen. Got up to this level here. I haven't drawn the line in because obviously it's past, but the 121 level, couldn't get through it. Got a nice trade short, couldn't get through the 20-day moving average, clear of it, down, got stopped out for a really good profit. Above the 20-day, stalls, and then we break back below the 20-day, we can get back in short. And yeah, okay, it's only 160 pips profit, but I think this one could become a really big profit. 110 and 100 on the downside. And yeah, we're at first level resistance here. Then you got the 116 level here, double trend I've drawn in, and the 20-day creeping down behind. If we come off that level, to sell, yeah, if we were to get stopped out, we just sell back through the 20-day moving average. Like the yen very deeply oversold historically. And yeah, if you look at both Eurozone and Japan, they both got big current account surpluses, but yeah, capital flows favour Japan. Okay, and yeah, risk off, and I've mentioned that if that comes, and obviously the yen will really push the euro down. So really like the look of this pair. Good long-term trend following trade. Right, let's go back to the next major pair I want to cover, which is GBP USD. Yeah, most major pairs have had decent rallies on the USD after the big fall. There's a massive fall. GBP comes back quite nicely, okay? Look at the volatility now. It's dropped down, okay? I personally think, yeah, you got 125 as really good resistance above the 20-day moving average. Then you got this level of support here. Low volatility. If you're a bear, just sell a downside break. In terms of this trade, not really again too much. It's 160 pips profit, but I think the potential is for a big, well, just said it, big downside break. What you do when you have this, obviously we've sold, and then you kind of hang around in the centre. My view is we've been doing this, bank out half, leave the other half in. We'll get something out of the trade even if we're stopped out. But if we get that downside break, 120 should easily be on the cards, and maybe a run on to 115. It's kind of trade setup I like because, tight volatility, clearly defined support and resistance. If you're a bear, sell the break. If you're a bull, of course, you could buy it. I'm not bullish, obviously, I'm bearish. So we'll see what happens with this one. Next pair. This is the pair that's kind of surprised me, actually. It's AUD USD, and I thought it would have broken down by now, but it's actually done the opposite. It's been pretty firm. See the trade, 63.80 and underwater. We're at 65.30. So 150 odd pips down on this one, but we're testing a really big level of resistance here. Okay, Aussie dollar, nice gentle move down. then the big fall. We traced most of the big fall, haven't we? But this level going to be hard to take out. This level here, key, in our view, need to break below 64. If we get below 64, and this 20-day moving average will be off to the downside. Now, in terms of the Australian dollar, recently it's been the top performing major. Why? Well, a lot of people are saying, well, yeah, China's gone back to work. So basically, Australia does a lot of trade with China. So that's good news. But China really, yeah, its economy has gone back to work. They've got no one to sell their goods to. When I say no one, obviously exports are well down. Okay. So we do not see, that as something really bullish for the Aussie dollar going forward. We think people are they're believing the Chinese data, which we think is manipulated. Yeah, China's slowing up, so that means Australia slows up. Also, people are saying, well, pandemic, Australia's going back to work. They coped with the pandemic very well. Well, yeah, they have. However, it's not going to help longer term that they get back to work. It's an export-led economy. And also, been reading a lot of background on the Australian economy, and it does have deep structural problems. You've got the problem with migration at the moment, which Australia needs, which is blocked off. Anyone who's really bullish of Australia going forward, I think, is going to be disappointed. It's got all the good news it can. It's tracked the S&P higher. I personally think the Aussie rally will be over. Obviously, we haven't been right so far because we popped back up to resistance, but the rally's on borrowed time. We break down to chart lows, then on to 50, and obviously we get risk off. Aussie's going to get hit really hard. And just to show you the Aussie being overbought everywhere, let's have a look at this pair here, which is Aussie CAD. And I like the look of this trade setup. Nice, clearly defined resistance and support. Resistance is obvious, daily chart highs, come up to test, can't get through, low volatility. Nice support here. And a 20-day moving average. We're bearish, I'd like to see that obviously snap. So if we get through up at 89.80 for fresh positions through that 20-day and that level of support, we should come down quite nicely. I've said it in quite a few videos. Going forward, Canada is an export-led nation exposed to global trade like Australia, but it's better in terms of it's exposed to the US economy rather than China, which I think will do better going forward. Also, Canada's exports will hold up better than Australia's. Just generally see the Canadian economy in better shape than Australia. So really nice level of resistance, level of support, sell the breakout, see if she runs. So really like the look. I like the look of the Aussie short and a good few pairs. We'll come to a few more in a moment. Let's go back and take a look at the next major, which is going to be USD JPY. For me, JPY just does not have a lot of downside anywhere. Okay, it is pushing the USD down. Okay, I did a video on this pair. Was it just over a week ago? Seen too much action really. It's still around 300 pips odd in profit. Just looking for the volatility to pick up with a downside break. See the Bollinger Band's tight. Nice level of resistance there. That's 107 and 20-day as well. Pop the stop up. It's back behind that level at the moment. And if we break down here, quickly down to chart lows, then 100, then 80 longer term. There's no yield advantage for the dollar anymore against the yen. That's what really powered the dollar higher for years and skewed the valuation. Dollar just too overvalued against the yen. Fair value for this pair is probably about 80. So like a lot of yen pairs, this one kind of slow moving, but hopefully the volatility picks up. What have we got next? We're going to have USD CAD. This one, this pair here, kind of nice level of support here. Need to see if it holds. It's again low volatility. Like to see it break back above the round number, that 20-day moving average. Look if this out of Bollinger Band and support to hold. If we get back through there, I think we'll go up to chart highs. In terms of risk to reward, buying an upside breakout, I think looks really good. And obviously if it doesn't follow through, you can always freeze it or take it out. But I've got a feeling get back through here, we'll go back up to chart highs. US dollar and yen longer term are going higher on all the commodity currencies in our view, but obviously at this moment in time got a little bit of a choppy price action. Right, what we're going to go and look at now is some more USD pairs and yen pairs. Let's go take a look at the charts. All right, first pair here is a USD pair. It's USD against the NOK or Norwegian krona. Now we think the dollar's oversold and is due a bounce anyway. We're obviously expecting some risk off to come in, but we've come to test a major level of support. You get the big dollar rally, retracement, hold support in these candles here, push off. Now we've worked our way back to support and the volatility has dropped. Now, this pair, simple in terms of the technicals, well-defined resistance, double trend line, 20-day moving average. We break above this level, could go back to the highs and just the stop can be behind the major support. If it follows through, you can hold. If it stalls, you can obviously freeze the trade. But it looks a really good risk to reward. NOK or Norway, major oil producer in Europe. Oil, it's had a bounce, but it's a bear market now. Risk off coming back, dollar oversold. For us, a good looking trade setup. Now, in terms of the next pair, you should keep your eye on it even if you don't trade it. It's USD CNH or US dollar against the offshore spot Chinese one. Dollar had a big surge up there, double topped, kind of sideways really, and that volatility again has dropped. This pair hasn't been too volatile, but if we look at what's going on between the US and China, obviously Trump blaming China for the virus, China fighting back, strong rhetoric between both nations. You've got problems in the South China Seas. A bit of a military standoff. It's two superpowers who really don't like each other at the moment. Now, China is going to struggle with exports, okay? We know that countries are pulling out business from China, Japan being a prime example. US will probably follow. Exports are going to be well down in future, or in the foreseeable future, due to the pandemic and the basic wreckage it's done to the global economy. So how can China defend its exports? Well, let the USD rise. People's Bank of China have a hand in keeping the US dollar down. If they're not getting on, why not just let the US dollar rise on the one, exports are cheaper, helps out China. This level here, a candle, 517. If we clear 517, then we could see a massive rise. The volatility will explode and we could go as high as 10 in our view. But even if you don't trade this pair, just keep your eye on it, because if it does break out strongly, risk off will be coming. Okay, next pair, and this has been one of our favorite pairs for months. We've got a small position in it and I wish we'd done a bigger position. From here, where I've got my cursor, that is a 14% rise after finding support at the 20-day moving average. We don't even come back to touch it. Now, in terms of this pair, I think 10 is a realistic level. Okay, with all the problems that are going on in Turkey. I just want to show you a monthly chart actually. That was a big crisis for the lira there, but it debated. But look, taken out 7 level decisively. Turkey's running out of money. They've only got reserves of 20 billion to defend the currency. That's not enough, okay? A run on the lira. If the dollar surges higher, that's going to impact on risk off and will hurt the euro, because European banks have big loan exposure, and even the Italian banks that are weak, you can get debt defaults. Now, Turkey needs credit. Where's it going to get credit from? I mean, the US Federal Reserve is trying to put credit into the market, swap lines, etc., just due to the huge amount of dollar debt out there. But will they get a swap line? Turkey? We don't think so. You can read the full posts in the Facebook group if you want to, but just so bearish of the lira. Yeah, sure. Yeah, USD's gone up a good way. It's got a long way further to go up in our view. So it's buying a breakout above that double top, or if we do come down to this 20-day moving average, just look, to key off it for longs. I really like the look of this trade for more strength, and I wish I had a bigger position, but it is volatile, so it's being sensible. All right, let's go on to the next pair, which is USD Czech krona. This is a euro proxy pair or euro correlated pair. We believe the euro is going down strongly. If the euro goes down strongly, the Czech krona will go down quicker, or the USD will go up quicker on the Czech krona. You get the big surge up. Excuse me, support holds here. Again, support holds. Doesn't quite get to support. Chopping higher. Volatility's dropped. I just like the look of that as a buy. And I think we could go as high as 28 or 30 in this pair. I think it looks really good. I also like the USD against the Polish zloty, which is a similar looking trade setup. I won't show it in this video, but you can go and take a look at it for yourself. We've got exposure in both, and we're looking at it as a long-term position trade. So we'll see what happens with this one, but I like the look of it. What do we got next? Let's have a look at US dollar Swedish krona. Dollar breaks up, a bit similar to the NOK really, comes down, bounce from support, then we take out support, quickly get back above it, it's now resistance obviously, then back through it again. Again, I just come through the double trend line. I wouldn't even wait for the 20-day moving average. I've mentioned Sweden in previous videos, huge problems in Sweden. Risk off coming, volatility's dropped down. The US dollar is a buy on the SEK on strength, in my view. A good risk to reward trade again, just like the NOK. Let's have a look at a couple of yen pairs. This is the one that's got my biggest position on it, and this one is losing a bit at the moment. 68.30 in, 69.63. It's 130 pips underwater. I thought we were really going to break down strongly here, and we've recovered back above the 20-day moving average. But the bands are tight, the volatility is pretty low. This level here is a big level, okay? 70 level, you see our stop is back behind 70.40. Very often, when you have a big fall, you have a gap, you can see the gap just there, you come back to fill the gap, and it fills the gap there, okay, on that candle, or those candles there, come back to test resistance again. I'm looking for failure, and I think you really want to come through this low, and also the 20-day moving average, which is at 68.17. If we can break down to chart lows, then on to 50, you can see if I was stopped out and go bank short, looking for the breakout to fail. Okay, this one I want to put a bit more on. I've got a reasonable position on it already, but for me, the AUD, number one risk on currency, yen number one risk off. I'm bearish of the Aussie. Yen is oversold. Hasn't worked out yet, but one I think, well, I'm hoping it's going to come good. And if it does break down, I think it's really going to sell off hard to the downside. Got a similar looking pair. This one's actually come down a bit better now. It's having a bit of a rally. Again, back through that 20-day. Try and take out this nearby resistance. If it doesn't, sell back through the double trend line and 20-day moving average again. Then look for it to go to chart lows and then on to 60. New Zealand dollar is also a sell against the Japanese yen. I won't show that pair in this video. You can go look at the setup for yourself. It's very similar. Let's look at one more pair, and that is going to be GBP AUD. Our own view is the Australian dollar basically is a sell against all other majors, and this is a really big fall. Okay, can't get through the 20 full, and here is a really big support zone. First level support there, the second level there. Why have I drawn the diagonal line that way? Basically because what you do is you have a lower low tail there, and what I want to see happen is it come back through the low there, then look and see if she goes the upside. Swing trade opportunity for me, and yeah, I like the look of it. Yeah, pound a bit oversold on the commodity currencies generally, but quite choppy action in GBP CAD, GBP NZD. I think there's three of them at the moment. The pound's so oversold and the Aussie's so overbought. I like the look of it for a buy, so we shall see. Anyway, there are some trade setups to look at for the up and coming week, and for us, yeah, dollar and yen to get stronger, and yeah, I'm really bearish of the global economy going forward. Yeah, this pandemic is not over until we have a vaccine, and the consumer is basically scared. Okay, and of course you've got general wreckage in terms of the global economy. Then you've got a huge amount of emerging market debt. We just looked at yeah, Turkish lira, which is in trouble. But yeah, all these emerging market countries or currencies are, because yeah, they've all got massive, massive US dollar debt. Yeah, Mexico, for example, South Africa, big problems. And I think that is really what is going to explode soon, is emerging markets just get massive debt defaults. And yeah, it's looking pretty gloomy going forward in my view. So yeah, dollar and yen bull. And basically a lot of the setups we've looked at have got really good risk to reward on them against really nice levels of support or resistance. So that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.